Hey, good afternoon, everyone. This is Bob Eberly with Kanzel Realty, and my real name is Robert, but no one calls me that except my mother did when I was little. I was never good. So you can call me Bob. And with me today, I've got a special guest. He's a friend of mine, Sean Moody. He owns credit consulting company because in today's day and age, there's a lot of people out there that have credit issues, and Sean can help you with those. So welcome, Sean. Please jump on and introduce yourself.
Thanks for having me, Bob. I appreciate it. So my name is Sean Moody. As Bob said, I'm a credit consultant. The company is Moody Blues Consulting. And we basically specialize in helping consumers and small business owners either establish, build, repair, or even maximize both consumer and commercial or business credit. And so over the course of the past decade, we've helped thousands of people achieve the dream of home ownership, as well as other financial goals they may have had by way of good credit.
And I think we first met at a chamber function, I believe.
Sounds about right.
So anyways, let's start off with a couple basic questions. Like, what is credit?
Well, credit in its most basic, form is the ability to purchase a good or service without actually exchanging money, right? The understanding that you're going to pay at a later date or a later time. So that's the basic definition of credit. And so now when you're working with, in today's day and age, you're working with banks, lenders, creditors, your credit score, which is basically a snapshot of your financial history, if you will, right? That basically allows the lenders to understand what kind of risk be as far as them lending you any type of money. And so the lower your credit score means the higher the risk. If you have a high risk, that means either A, you're going to get declined for that loan or that credit card, or it's going to be expensive. You're going to pay higher fees in the way of interest, right? So you want to make sure your credit score and your credit history, which drives the score, is in the best shape possible.
It's very easy for it to go down and very hard for it to come back up.
It's true. The FICO scoring model, unfortunately, is quite unforgiving. And so even if you just have one late payment, a lot of people think, it's just a blemish. I'll just go ahead and pay the account. But the reality is one late payment, first of all, it stays in your report for 7 years. But not only that, it can drop your score between 90 to 110 points.
Wow.
And so to your point, the scoring model is very unforgiving. So you got to make sure you stay within your budget and that you are responsible when using your credit.
Right. I see that a lot, especially with younger people who are just, because our schools don't teach us these things, and then they go out and they get a credit card offer as soon as they get out of college and they think, wow, this is free money.
Yeah, that's a great point, Bob. Unfortunately, credit is not taught in school. And from my perspective, they should start in grade school and then, of course, continue that in high school. And I can't tell you, I've done so many workshops with, whether it's high school students, I've done workshops with grade school students as well with their parents. Mm-hmm. And the reality is they need to be armed with this information early on, right? Because if you're going to try to build your credit or manage your credit, kind of like figure it out as you go, 9 times out of 10, it's not going to be a good experience, and you're probably going to hit some bumps in the road.
Funny thing is, I've worked with a lot of first-time home buyers in my career as a realtor, and they get a house that they like and they want to put an offer in on it. I'll say to them, okay, I need a picture of a check, and they're like, a check? They don't have a checkbook. They're like, well, I'll go get a money order. No, I don't want you to get a money order because a money order is real money, where a picture of a check, if you don't get the house, all you have to do is destroy that check. You didn't really use any money. You're just giving them a picture of the check so that you're showing them, hey, I wrote this check, and if you accept my offer, I'll submit this check as part of my down payment. And a lot of kids today don't have checking accounts because they either are using their iPhone on these things to hold something up. They get a card, and now I see people at the grocery store just tapping the card on the thing instead of swiping or inserting. So what if I'm planning to apply for a loan? Does my credit still matter?
Oh, absolutely. Absolutely. So, when you're applying for a home, the mortgage lender or bank is going to want to, first of all, you want to get a pre-approval, right? So to be able to get that pre-approval, they're going to access or pull your credit, and they're going to pull all 3 bureaus in what's called a tri-merge or a 3-bureau report, because they want to understand what your credit history is, what kind of experience you have with credit. And, in layman's terms, do you pay your bills on time? And do you manage and are you staying within your budget, right? And so, so your credit score does matter. And ideally, you want to be, a decent credit score. What I'd say fair is between 680 to 720. Good credit scores.
I had Brian on a couple weeks ago from House Financial. He's a home lender. Mm-hmm. And he really said that in their industry, if you're above 620, 625, he said there's really not a lot of difference between 780 and 6.25. It's just going to be the rate that you're going to get. So there is kind of a difference. If you're a 780 FICO score, you're going to get the best of the best. You're just getting into the game. You're going to be approved approved, but you may not get the same, I don't know what the word I'm looking, you may not get the same terms that a person with a 780 would get.
Correct.
So how somebody, I see a lot of these commercials on television and, for credit and Credit Karma and all those things, but how does somebody find out what their credit score is? Because most people don't know.
Yeah, so a couple different ways. A lot of the banks right now, especially the national banks, will give you access to at least one credit bureau and FICO score, right, which is FICO score 8, is used in the majority of the banks right now when you think about any type of lending, whether it's getting a vehicle or a credit card. For the discussion we're having today, when you look at the purchase of a home, you really want to look at the score that the mortgage banker or the mortgage loan officer is going to be using, and they're going to be using your FICO mortgage score, right? And the only place to get, well, one of the only places, not the only, but one of the only places to get all of your mortgage FICO scores is going to be at myfico.com. Unfortunately, it's not free to get your scores. It's going to cost you anywhere between $30 to $35, and you can do it monthly. But anyway, that'll give you all of your FICO scores, including your mortgage score. And that's important because, the scores that are used for your mortgage, they use the older FICO models, and it's not the same FICO score they're going to use when you go to purchase a vehicle or when you're going to get a credit card. Additionally, if you're using Credit Karma, you mentioned Credit Karma. Credit Karma is using a different scoring model called Vantage Score 3.0, which is a completely different scoring model, and less than 10% of banks are actually using that score right now. So when you're going for a mortgage, they're going to pull your mortgage FICO score. So you want to make sure you're comparing apples to apples. So you're not going to go to Credit Karma to look at your mortgage score.
So that website was myfico.com?
Myfico.com. Now, you can get your reports themselves without the scores for free. You can go to annualcreditreport.com. You can actually get those reports on a weekly basis. As of today, you can still get your reports on a weekly basis from TransUnion, Experian, and Equifax. But keep in mind, these are the full reports, but they do not include the actual scores.
So what if they know their score, but they don't know what these numbers mean? 620, 780. I mean, we've mentioned a few of them today.
Well, so if I'm understanding your question, they don't know what the numbers mean. Well, a couple different things, right? There's 5 factors that go into your FICO score, right? So the biggest factor at 35% being your payment history, meaning pay on time. We talked about what one late payment can do to your score. Second highest factor is going to be at 30%, which is going to be your credit utilization. That's a fancy way of saying the amount you owe. And it's particularly important when you think about your credit cards. So you don't want to max out your credit cards. The general rule of thumb is you want to keep balances. If you're going to keep a balance, ideally pay off your credit card balances each month. But if you're going to keep a balance, ideally you want to keep the balance less than 10% of the limit. 15% is based on the age of the accounts. 10% is based on new credit. So you want to make sure you limit, especially if you're in the market to purchase a home. Now is not the time to make purchases, especially when they're going to be pulling your credit to create hard inquiries, which is 10% of your score, right? So you're not buying furniture or vehicles or anything while you're in the process of applying for a mortgage. And then last but not least, types of credit. There are 3 different types of credit: mortgage, an installment loan, like an auto loan, and then of course your credit cards. So if you have credit in those 3 buckets, that's an additional 10%. So that completes the whole 100% pie chart, if you will. And again, your score, that's how it's calculated, but the score itself, like we said earlier, you want to be bare minimum 680 to 720, somewhere in there, right? To be able to get a decent rate. To the point you made earlier, if you're at a 760, 780 plus, generally speaking, no matter what kind of financing you're looking for, you're going to get the best of the best rates.
Right. So does having a credit card help or hurt if they're trying to build up their credit?
Credit card can help. What I tell clients, I tell family, friends, look, the only way you can build credit is by using it, right? Mm-hmm. Now, the caveat, though, is you want to use it responsibly. You don't want to just spend money for the sake of spending money, and certainly you don't want to spend money that you don't have. Having said that, let's say you're starting to build credit, you're brand new, and whether you just graduated high school or you're fairly new to credit, having a credit card is a great way to build credit. Now, one way you can use the credit card and not take on unnecessary expenses is what I called, manufactured spending, or what I call smart manufactured spending, meaning you're using the card for monthly expenses that you already have, small monthly expenses. And that can be paying your gas or your cell phone bill. You might have Netflix, even though that's not necessarily a necessity, your internet, cable, right? So a small recurring monthly bill that you already have or monthly expense, you put that on the credit card and then you pay it off. And so now you're building your credit. You're not taking on any unnecessary debt, right? And you're paying your bills.
Yeah, you're demonstrating that you're responsible with your credit and that you do.
Correct.
So if somebody's not really happy with their credit score, but they want to improve it, what should they do?
Well, first, they need to know exactly where they stand, right? So it goes without saying, pull your credit report regularly, at least once a month, right? Whether you go to annualcreditreport.com or any of the other websites, you go to your bank app, but see exactly where you are. When you look at your credit report, look for errors, right? So there have been studies that show as much as 79% of credit reports contain at least one item that may be outdated or inaccurate, right? Or unverifiable. And so you want to make sure you look at your credit report and look for any type of, questionable activity, if you will. Third, I would say, again, only apply for credit when you need it. So the last thing you want to do, especially if you're planning planning a big purchase like purchasing a home, you don't want to have a ton of inquiries out there, whether it's when you go to some of these local stores, when you go to get to the checkout, they ask you, well, hey, do you want to save 10%? Because they want you to fill out that credit card application, right? Too many of those inquiries can not only hurt your score, but it makes it look like you're desperate for credit when you have too many in a short period of time. Pay off your credit card balance. Ideally, be a transactor, not a revolver, meaning you're paying the entire balance off at the end of the month versus carrying a balance. Right. So being a transactor versus a revolver especially when it comes to your credit cards, can be very helpful.
Good info. I've heard that checking your credit score can bring it down. Any truth to that rumor?
That's false. So under the Fair Credit Reporting Act, as consumers, we have the right to pull our own credit as often as we want. You could do it every day if you wanted to. There's no impact to your score. It creates what's called a soft inquiry. The only time pulling the credit can affect your score is if you authorize a lender or a bank by pulling an application and signing that you are authorizing or giving them permission to access your credit report. Right. So when you have a third party access your credit report and you give them permission, then yes, that creates a hard inquiry, and too many of those inquiries can hurt your credit.
Right. If I'm shopping around trying to find the best rate for a mortgage or a car loan, is that going to hurt my credit?
So in the instances of shopping for a home or a vehicle, those two specific instances, the FICO scoring model knows that you're probably shopping. And so what happens is they do, for lack of a better phrase, you can have multiple inquiries in a 2-week period. Technically it's 30 days, but I tell clients, if you're going to go shopping for a vehicle, if you're going to go shopping for a home, go ahead and do your shopping. And as long as you do it within a 2-week period, even if you have multiple inquiries, it'll only count as one. But that only applies for student loans, auto loans, and mortgages. And by the way, for a mortgage, so inquiries stay in your report generally for 2 years, but they're only calculated in your score for 1 year. As it relates to mortgages, the inquiry stays on your report for 2 years, but it's only calculated in your score for 11 months. And that's because the first 30 days when you apply for a mortgage, that inquiry has no impact to your score. Yeah, a lot of people don't know that.
Buyers that, they just look at it and say, who's pulling your credit? And they put one and one together and get two. And they're like, oh, they're looking for a car, they're trying to buy a house. This is an interesting question, is how do they know they have the right credit card for their needs?
Well, needs can vary, consumer to consumer. Like some people, for instance, most cards nowadays have some sort of benefits or perks, right? That can be points, cash back, can be travel miles, right, or a combination of those. Some cards may have an annual fee, some don't have an annual fee. And so there's no one size fits all answer. Ideally, you want to have a card that, again, is going to fit your specific needs. So as an example, if you love to travel, maybe you get a card where you can earn miles, where ideally you can travel for free, once or twice a year, or at least get a sizable discount.
Yeah, either that or my sister has one that collects, I think it's with Marriott, she collects points from them, and, they go somewhere and they're getting the hotel room for free or something like that.
Yeah, but there's some great resources out there. One of them is NerdWallet. So if you go to nerdwallet.com, you can do a comparison. And again, based on, you can put in, compare credit cards, and you can put in what interest you have, whether it's, balance transfer card or cards that allow you to travel, points, cash back, no annual fee. And you can pretty much figure out, what may be the best card for you.
So tell me about Moody Blues, your business.
Yeah, so as I said, we're celebrating our 10-year anniversary actually in September. And yeah, we basically, we're a small boutique firm based out of Albany, New York. And we specialize in helping people really maximize their credit, what I call credit empowerment, right? And that can take on many different forms. We're very deliberate around being strategic to help people with their credit needs so they can achieve their financial goals, whatever that might be, including home ownership, starting a business. And we've helped many clients do that over the course of the last decade or so. So we do everything from credit repair. So we'll send out legal disputes on your behalf to make sure that bureaus, which by the way have the burden of responsibility to ensure that all information on your report is reported accurately, right? So we are consumer advocates. We will use every facet of the law to make sure we protect your rights, to make sure that your credit report accurately reflects your credit history. We've also aligned ourselves with strategic partners to provide ancillary services. So whether it's student loans, you have issues with your loan might be in default, or you're looking to consolidate, we have an amazing student loan specialist on our team. I have attorneys that I'm partnered with where we've actually helped clients get over $80,000 in settlement money based on collection letters that have violations. And I'll touch on that in a second too, because I think that's definitely something that's a hot topic, medical collections. People that have bad debt, whether, they may have considered bankruptcy, but they didn't do bankruptcy, but they have a ton of bad debt out there in the way of charge-offs. We can help them negotiate with the lenders to get those those balances reduced. And then we also help clients generate an action plan with specifics around how to actually build their credit. So instead of just giving them a couple of ideas, we give them an action plan and tell them exactly what credit card to open, what credit building account to open, how we can potentially report rental payments if they're a renter, if they want to add those rental payments to build their credit. So we give them an action plan tailored to their specific credit file to help them get back on track to either build or maximize their credit.
Excellent. Something you said that tickled this in my memory is I recently had a transaction where the person was, she was older too and did not know how to manage her credit. But on her credit report, and I don't know how this got there, but the father and the son, they must have been co-signing or something like that. And I tell everybody, don't co-sign for anybody, because if they don't pay, they're coming after you.
Agreed.
The attorney that was handling this said, yeah, look at this. He goes, it's the same name for the father and the son. Never name your kid your name. He goes, people think that's a great idea. It's not. And that was coming from an attorney. But, okay, so moving on here, you already mentioned, and we talked about a little bit about Credit Karma, and I think you really answered that. What about collections? And you mentioned medical collections. I hear that a lot. Somebody gets sick and they don't have hospitalization. The doctors have to take care of them if the credit goes. But then the next thing you know, they're getting a bill.
Absolutely.
Thousands of dollars.
Absolutely. And it's not uncommon. I just got a collection, believe it or not. I do this for a living for $15. $15, right? From a local collection companies. And it's probably a copay that I've already paid, but you've got to know how to handle this, right? And so, yeah, medical collections. So the good news is that the bureaus announced major changes last year, June, and here's what they are. So one is, if you have a paid medical collection on your credit report, meaning it's paid to zero, that collection should be removed. It should not reflect on the report. So if you have a medical collection that's zero, that's on your report, you can actually send a dispute letter to the bureaus with that information to tell them to remove it, because it's a paid collection.
Right. And even
secondly, it's paid correctly.
It probably impacts you though, doesn't it? Because it was a collection.
It impacts you, but once you get it removed, it's not going to impact you. So the goal is a paid collection, paid medical collection specifically, should not be on your credit report. Additionally, the bureaus announced that as of the first quarter of 2023, which obviously we're here already, we're in March, any medical collections $500 or less should also be removed from the report. So if you have an unpaid collection less than $500, that also should be removed from your report as well. Okay, so if any of those scenarios are true as you look at your credit report, because the reality is 1 in 5 people have a medical collection on their report. So less than $500, that should be removed as well. The third change was, prior to June of last year, medical providers could send you to collections within 6 months if you had an unpaid bill. Now they have to wait at least a year to send you to collections. Okay, and so my recommendation to anyone that has a medical collection on their report is, first of all, don't just automatically go ahead and pay it. Reach out to your original provider to verify if indeed that money is owed, and then take it from there. You can always dispute it.
Right, because if you have health care coverage or Medicare or something like that, it could just be in the process, and the people that want the money, they're like 3 steps ahead of them, and it could just catch up, or it could be overlooked. I mean, these are human beings that are processing these things.
Mm-hmm. And by the way, I want to add this. So if you have a medical collection, whether it's paid or it's less than $500, and they don't remove it from the report after you've sent a dispute, now you have a potential case. Mm-hmm. And that's one of the ways I've helped clients get north of $80,000 in settlement money over the course of the last almost 5 years. And so that's something I love helping people do, because it's fairly simple process. And under the FDCPA, which is the Fair Debt Collections Practices Act, collection companies have to abide by those rules. And with medical collection, that's a huge change once the consumer has a chance.
Right. You mentioned something in the beginning that I was not even aware myself that you did, but business credit. Can you talk a little bit about that?
Yeah. So again, when I started my practice in 2013, and I didn't realize how many business owners I'd actually have the opportunity to work with. And through the course of the years, first of all, regardless of your tax bracket, what industry, and whether you're self-employed or you're a W-2 employee, the reality is life happens, right? Whether it's divorce, bankruptcy, job loss, medical emergency. And so I found myself working with a lot of self-employed or small business owners. And so really wanted to be able to, and me being a small business owner myself, I really wanted to be a resource and be able to help small business owners effectively separate their business expenses and from their personal expenses and their personal assets, mm-hmm. right? Because unfortunately, all too often, and I was there early on when I started my business, but all too often I see business owners using their personal credit to run a business, which can be very, very dangerous, especially. Mm-hmm. And so because of that, I launched a sister company, which is CBM Business Solutions, which is actually my son's initials. So I didn't name him Sean, to your point. Put that together to provide 3 things. One is help small business owners establish business business credit. This is credit that's attached to the business, not to them personally, right? So you can actually get access to 10 to 100 times more credit on the business side and really separate. So for instance, let's say you have a real estate investor and they're buying materials, they're working construction, all that stuff. They shouldn't put that, let's say they have to go to Home Depot or Lowe's. That shouldn't be on a personal Lowe's or Home Depot card.
Right.
That should be on your business Home Depot or business Lowe's account where you'll actually get an invoice and you can pay the invoice. And by the way, none of this shows on your personal credit report. So you want to affect it. So we help small business owners establish their business credit, and we can help them do it from scratch, soup to nuts. We have an amazing business credit builder program. For new small business owners, we have a business in a box where we can help them with everything from business formation, and then all of the different data points that banks look for legitimate business, whether it's the website, the logo, business address, telephone, all those data points. Like I said, the banks look for, we can help them with. And then last but not least, I'm partnered with some fintech lenders as well. So if the small business owners, if they're turned down by the national or their local bank, we can find ways to help them get access to funding based on either their credit, collateral, or their cash flow.
Great. So how do people get in touch with you, Sean? I will put it down in the, it'll be in the video.
Yeah, I appreciate it. Thanks again, Bob. So you can go to Moody Blues. So it's Moody with an IE. Well, actually, I think everything's right here on the screen. So moodybluesconsulting.com is our website. We're also on social media, Facebook, Instagram, even TikTok, believe it or not, and LinkedIn. Our office is conveniently located at 1540 Central Avenue in Colony, right off the Northway. And of course, our telephone is 518-245-9411.
Okay, good stuff. Thanks for coming on, Sean. I know some people might think this was kind of boring, but this is actually very important information for anybody that's just starting out or people that are looking to buy a house.
I would just implore people, look, the reality is in the last couple decades, the rules of credit have not changed, right? It's the same 5 rules. And so in the age of the internet, there's really no excuse not to know where you stand with your credit and then how to go about not only building it, protecting it, right? And so I would just implore everyone to just, I'm sure everyone checks their bank account at least once a day or a couple times a week. Have that same focus and discipline around your credit and you should be fine. But again, thank you for your time this afternoon, Bob. I appreciate it.
I appreciate it. Appreciate you coming on, Sean.